struggling with prop firms? Today I'm going to be speaking about Forex order block strategy, so make sure you hit that like and subscribe. I mean, this is going to help you even if you're a beginner level, especially if you're a beginner level, and even if you're not, this is definitely going to be some value for everyone. So I am going to be live trading. I'm going to be doing on prop firms every single day starting next week, so make sure you hit that like and subscribe. I want to be providing a lot of value. I'm going to be dropping videos every single day, so hit that like and subscribe. Follow the journey, guys. There's going to be value for everyone every single day. So let's get straight into it without wasting any time. So today we're going to be speaking about order block strategy. So I mean, this is basically an introduction to identify and obviously key and support resistance levels on the charts using order blocks. I mean, it's not hard, it's quite simple, but we'll break it down one by one and just make it, obviously we've heard a lot of traders that trade order blocks, so this is just gonna be a quick, don't want to keep the video too long, but just to show everyone. Okay, so basically starting off with what is an order block, right? An order block basically, guys, is a cluster of limit orders. It's a key level of a support resistance area where buyers and sellers, where there's basically a lot of selling and buying pressure. So an order block forms when a cluster of limit orders build up on one side of the order book. So you can also call it key and support resistance levels. Order blocks typically form when an imbalance supply and demand is formed, and the cluster represents an imbalance between supply and demand at a price level. So in summary, an order block is basically a clustered imbalance of limit orders at a support resistance level caused by imbalance supply and demand. So that's the most simple way to put it. That's what it basically is, but we'll go into examples as well. So okay, so what are the common questions? Okay, what are order blocks? We've gone over that. Why are order blocks important? Okay, order blocks represents areas where many market participants have entered or exited positions. Watching how price reacts around these levels can give clues about overall market sentiment. Now obviously this is important because they represent, an order block can show key levels, key areas. So as soon as price enters those areas, that's when you definitely want to be most interested. Now how can we identify order blocks? Look for areas on the chart with increased volume, with large candle bodies and wicks. These show increased market activity and likely market order blocks. How do I trade order blocks? We'll obviously go into that. I'll show you live examples as well. Look to enter trades in the direction of the order block break once price breaks above or below the order block, high or low. Set stops beyond the opposite side of the block. What are the best time frames to for trading order blocks? We'll go into that as well. Order blocks are most clearly visible on time frames of 15 minutes and 1 hour and 4 hours from my personal experience. Lower time frames have too much noise, and that's what I personally believe. So here we've got a few examples of order blocks. Here is a bullish order block, here is a bearish order block, and here obviously an order block breakout, if you want to call it. So obviously there's many factors you look into: candlestick patterns. As soon as this order block comes over here, it's formed, price comes here, and a bullish order block is formed, and price, as you can see, goes up higher from there, bounces in the opposite direction. This one, candlestick pattern forms, giving us a sell signal, and price just tanks from here at a sell order block, or a bearish order block, if you want to call it. So reversal patterns obviously on this order block level as well, from a breakout from an order block. This is for GU, GBP, USD as an example. So there were a few examples. Now obviously if I was to this is on gold, guys. So this is again on the 15-minute time frame. Now the thing with these order blocks, guys, I just want to quickly get into this. Even if I was to go on the 1 hour, this will make it a bit easier for you guys. Okay, here we can see a order block, a bearish order block formed here from the past. As soon as price touches it, it tanks back down. Now this, in the beginning when I started trading, I used to think, what, order block formed here, I'll just wait for price to come up here and then it'll tank. Easy. I'll trade on a prop firm like this and I'll pass the prop firm. Yeah, it doesn't work like that, guys. That's because what I didn't know is, watch this, when you go playback, right, what this price is down here. Now this order block is formed here So what I used to think, obviously once the price breaks through an order block, the previous order block normally vanishes. These are indicators I've used, creating a few order blocks for me. So once price breaks through this order block, this one will vanish. So what I'll do is if I just play this, guys, look, it's broken through and it's vanished. So imagine if I would have sold down here where it originally was, this would have been a loss. And that's exactly, where the next step is very important. You have to look at candlestick patterns for entry levels. So if I go down to, okay, price was here, right? If I look at this is why you got to learn candlesticks as well. It's like learning a language, right? So price is tanked here. So if I go on a small time frame on the 10-minute one, okay, so this is 1 minute. Let me make it a bit more easier for you guys. Okay, so I'll grab 2 lines, order block, my own lines I'm drawing here, order block. Go down to the 10-minute time frame. Okay, I mean, even once price entered this area, it gave a rejection candle. The buying power was very weak here. Sellers pushed price back down. So you can see this pin bar candle or inverse hammer candle, you want to call it. Just one moment. Now look at this candle here. Look at that rejection. Now even if we was to sell off this, now we're not aiming for something crazy. My own personal strategy is a 1 to 10. That's why I put. That's for totally different currency pair, my own style. This is just going over order blocks. If you even target a 1 to 3, which most people do, so even if we was to enter after the bearish candle closed and formed, remember, always enter after a candle closure, don't enter before that. Once a candle is closed, so this would have been a nice 1 to 3. So let's just say even you didn't want to enter off this, you would have still waited, and then personally I would always wait once prices in the middle of the order block, wait there. This candle broke the low of the previous candle, which is another signal in my eyes. I will take this trade. I mean, even here, look at this, guys. You can see the rejections, wicks, rejection, another 1 to 3 easy. So could have done an entry there. You could let's clone this. So it would have been your choice where you want to enter from, but now, okay, 5-minute time frame, 10-minute time frame, right? You got to stick to one time frame because you can't be messing about with the time frames as well. I mean, this would have been even a 1 to 4, a nice trade there on this order block trade. So now obviously, if I go back, now look, now this is still showing, but now look at this order block here. Now if you think, okay, I could do the same strategy with the candlestick patterns and all that, I can do it same over here. Let's break it down. Now look, it's too much. This is what I mean, too much noise. You gotta, okay, let's just hide these indicators because we know where the order block is, but okay, we've got pattern there, reversal pattern, it's an evening star. So then that's an engulfing candle. The sellers are stronger here. You press play and look what happens. You think, yeah, I'm going into a little bit of profit, keep the trade overnight, whatever you want to do. Yeah, it's gone lower and lower. But another thing about this is, look, how long I personally don't like holding the trade that long. But look, okay, once it hit that, but even if let's just say we started from here, right? We started from here, how much would that give us? A 1 to 2. Now it depends if you're okay with the 1 to 2 waiting, and forget the ruler. We started here. This would have took us 1 day and 5 hours to get to this. One day and 3 hours for a 1 to 2. If you got the patience, great. That's you can do that. But you gotta back test this. That's why back testing is so important, guys. You have to back test this. It may look simple the way I'm showing it. If it's not, do hit the let me know in the comment section. And I understand it's not that simple as well, but obviously you gotta basically, even the examples here, if you see the rejection candles here, don't take every single trade. I personally use footprint charts, which do make things a bit more obviously order flow, and just want to you should look into that as well. Definitely will help you with entries and exits, but obviously things take time. Practice makes perfect. You do have to put time and effort into this. It's not just gonna happen overnight. Obviously, another thing I want to mention is never don't find the overall trend when trading order blocks. Trade with the trend. So what we mean by that is, guys, okay, let's see what the overall trend is. We went for a sell here, but let's see what the overall trend is. Okay, the market's going sideways, so in my eyes it's ranging. It's not going down, it's not going up, but let's see what the overall trend is. We've got a bigger time frame. Okay, overall trend, we've broken the highs here. So even if I just do that, I'm not a trend line trader, by the way, guys, if anyone just because I'm doing this. You know, like this high here is bigger than this high, so we are in an uptrend on the weekly. Now just because we're in an uptrend on the weekly doesn't mean we're going to be in an uptrend on the hourly. On the hourly, it could be a totally different story, right? Because now look, it's okay on this hourly, yeah, we are in an uptrend, but we were looking for a sell. But like again, you know, but we went for a sell even though there's an uptrend. So like I mentioned before, you gotta do your research, you gotta do your back testing, you gotta just put time and effort into this, stick to one strategy, to one that suits your personality, and that's how you gotta just go with it. Okay, order block trading rules, and make sure you stick around for this, guys, because this is going to be very, very important. Okay, so you know, rule, you know, you have a limit order only. Use limit orders, not market orders, to enter and exit trades. A 1 to 3 risk to reward, aim for at least 1 to 3, guys, not for 1 to 2. Me personally, I like to go for a 1 to 8, 1 to 9, 1 to 10, but I've got a totally different strategy that I use. It's a hybrid strategy which I came up with myself, combining 4 or 5 strategies together. So that's obviously a story for a different video, but have a nice risk to reward, because you will lose trades as well. So especially with the prop firm, then you want to have enough, you know, a nice risk to reward where you can make up for the losses. Okay, trading with order blocks. Identify key levels on the chart. I just showed you how to do that. You can use indicators. Eventually, after a bit of time, you will become better and better. You know, wait for price level, you know, price to return to that level. Be patient and wait for price to come back and test the order block. Don't just, as soon as price touches the order block, gotta wait for a bit of a retest as well. Watch for rejection signals, look for candlestick patterns and other signs that show the order block is holding. Enter trade in direction of rejection. If price rejects off the level, enter a trade in that direction with a stop loss on the other side. So obviously there are trading rules. You gotta have your psychology in place. You gotta follow strict rules. You know, you don't just enter a trade just because price touched the order block. There are ways to do this, but again, with patience, you know, everything will fall in place. Tips for trading order blocks. Now this is something obviously I've added just so that, you know, everyone just doesn't look at what I've drawn and be like, yeah, you know, now we know how to trade order blocks, I want to buy a prop firm challenge, I'm just going to enter. No, it doesn't work like that. So identify key support resistance levels, look back on the price chart to find levels where price reacted strongly in the past. These are likely to act as order blocks again. The bigger the time frame, the stronger the chances the order block will hold. Watch for reactions and rejections. An order block is significant when price reacts or bounces off the level with a bullish or bearish candlestick pattern. Wait for confirmation. Do not trade the order block immediately. Wait for a confirmation candle or pattern to develop before entering. Define your risk to reward, very important. Set a stop loss below, above the order block, and take a profit at a reasonable risk to reward ratio, like 1 to 2 or 1 to 3. Me personally, 1 to 5, 1 to 4. Depends really, you know. As you get better with the trading strategy, you'll become, you know, you'll know how to set the best risk to reward according to your own strategy and personality. Be patient after entry. Patience is a very underrated and not spoken about enough skills, you know, trait that every trader needs to have to become profitable. Give the trade room to work out after entering an order block. Manage risk but avoid prematurely exiting. You're gonna obviously be scared once you're running in a little bit of profit. That's where you gotta be hopeful, and you're gonna be hopeful when you're in a bit of a drawdown. That's where you've obviously just gotta let the trade do its thing. If it hits the stop loss, it hits it. If it doesn't, just set this trade and just walk away. One trade for the day. The 4 rules I always mention, you know, I can't mention them enough. 1 trade for the day, 1% risk for the day, 1 trading session, and 1 trading instrument. That's it, the 4 ones. That's all you should be doing. Obviously, now you can use indicators to help you, you know, RSI and many other indicators as well, you know, oversold, overbought areas, combining, you know, obviously with order blocks, combining order blocks with momentum indicators such as obviously RSI, moving averages, you know, and many other indicators can help traders determine the strength of a potential breakout or reversal at the order block level. Monitoring momentum in addition to strategic support and resistance levels gives a more complete picture. So obviously I wouldn't again just rely on indicators. I don't use any indicators. I just think they're, you know, they're lagging. They normally, you know, give you a signal after price has already done its thing and it's already moved on. So, but you can still use indicators, and I know a lot of professional traders do use them. So again, back test and see how it sits well with you. Advantage of order blocks, more accurate trade entries. You get to identify support resistance levels, which is very helpful. Determine market bias, see where institutions are active. So okay, this is a bit of something I've created. 1 to 6 step rule when you look for. Okay, number 1, recognize key order blocks on charts. That's what you got to do. Number 1. Number 2, identify pullback and entries near order blocks. Number 3, set stop losses below or above the order block, depending if you're buying or selling. Number 4, take partial profits at 1 to 1, 1 to 2, 1 to 3 risk to reward targets. Me, I never take partials, again with my strategy, but this is for those who will, want to trade order blocks. Number 5, move stop loss to break even at 1 to 1. This is something I do, but I've read Mark Douglas's book Trading in the Zone like 5 times. You have to learn to accept the risk. So recently I don't do that anymore. If it's a loss, I move on to the next day happily. Number 6, trail stop for remaining position to let profits run. Obviously, once the trade starts running in profit, you might want to follow the trade and just trail it. It's basically like tailgating when 2 cars are together. Just follow it. If you think price is going to turn around a bit, just let it hit your stop loss, but you're already in profit, right? So it doesn't matter. And if the price keeps going, again, just keep following it. Simple as. So yeah, that was just a quick, trying to keep the video short as possible. Obviously, when it comes to these strategies videos, they do be quite a bit of time. So I hope you got some value. Hit that like and subscribe. I'm going to be making a lot more content, and trading live as well. So I'm out.